like for any DePIN thing to be successful, like there fundamentally needs to be like a latent resource that people have that they effectively have a zero opportunity cost dynamic to contribute that resource to make money, right? It's like if you live in the middle of New York, you can't build a cell tower there, but you can put up this router and start making money. Like you buy this thing and it starts printing for you, right? Like why wouldn't you do that? It needs to be easy.
Quick shout out to today's sponsor, Algorand. We'll hear more about their AlgoKit 3.0 and how it's built to supercharge your app development on Algorand later on in the episode.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of 0x Research. Today we are joined by Nick Carpenito, first time on the pod, and Daniel Shapiro. How you guys doing today?
Doing well.
Yeah, everything good here.
Awesome. Great to have you both on. I think before we jump into things, as always, we have to give a quick shill and shout out for Permissionless. It's coming up end of June 24th through the 26th. As always, use code 0x10 if you want 10% off tickets. A bunch of the research team, a bunch of the Blockworks team is going to be there. People from around the industry, as always, will be at Permissionless. So if you want to come out, meet some folks, chat it up, see some great talks, and hopefully maybe some fun games and side events and other things that we're cooking up. We'll see you out there, and it should be a ton of fun. So hope to see you there. 0x10, link in the description. Let's dive into it for today. I think the big sort of talk in the markets lately, it's sort of the same thing, but it's the continued like US admins, talking up and down of the markets. I think it seems people are really just like unsure of what's happening right now, though I've noticed there's a bit more of like macro doomer takes on the timeline. Whatever that means, maybe they're right, maybe they're wrong. I think it's really, to me, it seems like it's very hard to say, just given that like the market kind of sneezes depending on what Trump wants to say or tweet for the day. And that's kind of been how things have been feeling. But I'm curious, Shapiro, if you have any big takeaways, like how are you feeling about the next, like maybe a couple of weeks or months? How do you feel about the market?
Yeah, in terms of a couple months, I'd say that's probably where I'm most uncertain. Long term, still feeling very bullish. Short term, I think is in terms of like next couple weeks, that's probably where I'm most uncertain. I still think that there is some tariff uncertainty out there. I think the market could be getting a little ahead of itself in terms of thinking that like a deal could come with China. I think tariffs might be stickier than people realize. So that would have me leaning towards somewhat of a bearish bias, especially considering we've rebounded up to mid 90s now, quite aggressively. But then at the same time, if you look at a lot of the order flow data, things like funding rates, open interest, premium, Binance basis, or even like CME basis, like those are all very low still, which indicates that, typically after a move like this, you'd see a lot of people piling in. But that doesn't occur, or that doesn't look like it is the case. So to me, it looks like there might be a little left in this rally, and that's kind of outweighing, I guess, like the tariff thing. So I'm feeling pretty neutral right now. I don't feel like there's any strong risk reward setup either way. I think if you have longs from the bottom, just kind of holding them, but yeah, just letting things kind of unfold. And I think is just being patient is where I'm sitting right now.
Yeah, that it does seem to be a common takeaway or theme that I'm seeing. And even in some of the newer token launches, it's kind of like one way or the other. Like Zora was kind of hyped up, and then I don't know, people saw that the token was like not going to accrue any revenues or anything from the protocol, and it was just kind of like a meme coin, and then it went down following launch. And then Anisha, I think, was kind of the opposite. It was like sort of not really talked about, sort of and maybe an under the radar a little bit. Not that they necessarily were actually under the radar, but just maybe under discussed or under talked about, at least on the timeline. And I think it performed fairly well in the early, maybe few days or week. We'll see where they go from here. But if we were still in like max bear mode, I would think that we would we would see all tokens just absolutely plummeting at their fairly high launch valuations. So there does seem to at least be some like some people are maybe a little bullish, some people a little bearish, maybe a lot of neutrality or just uncertainty again. It feels a little bit similar to maybe a few weeks ago or maybe a month ago, where it's like it wasn't max bearish quite yet when we ticked way down in the markets, but people were like, yeah, I don't know what to do. Like, we don't have any clear answer on what's going to happen with tariffs. Trump's like a time bomb, no idea. So I'm just going to like sit on my hands. And that seems like what's happening again. We'll see how it plays out. I think we have to maybe wait for the next, like, now is a good time to buy or not, now is a good time to sell from Trump himself to see how the maybe broader market's going to react.
Yeah, I know. Something that you've brought up that I really, really like is looking at like new token launches, and then also like the top meme coins as kind of like a metric for risk. And so you see, like, you saw Fartcoin, kind of front running, the last week of price action, maybe over the prior month. You see these new launches doing well, and I think this goes back to a theme that I talked about. Anytime I come on this podcast, like let's say back in Q1, we were talking about like the idea of like, are we still having these 4-year cycles, or are those over? I think moving forward, kind of treating this like, I think we all kind of took the stance that we think that the market structure changed and there aren't these 4-year cycles anymore. And I think under that context, I don't think you should ever get too scared and kind of buy into the macro doomerism too much. I think there's always going to be opportunities, and when prices are depressed, that could be times to buy. But yeah, right now it feels like we're with the bounce, we're kind of now back kind of in neutral and waiting to see what's the next catalyst, what's the next thing that Trump does.
Yeah, I've seen, and we've talked about this a lot over the past months, even because the like Bitcoin decoupling from equities or risk has like continued to be a topic, and I'd say that it will continue to be like hard to pinpoint whether that's true or becoming true or not until like very much after the fact, where that becomes clear. If it is happening, it won't be short-term data is not going to give you like a clear indication of like that is happening or not.
I will say though, I've been listening to a lot of macro guys, and they are starting to take notice. If you look at Bitcoin, since November 4th, since Trump got elected, I think it's up, I think double-digit percentages. The QQQ is down like 8%, right? So, and then if you measure it year to date, Bitcoin's up year to date, Qs are down year to date. So I think that there's early signs of that divergence actually occurring. I think that there's now solid statistical evidence. And then you compound that with the fact that Bitcoin typically lags gold by like 90 days. And obviously gold stopped, but gold's been ripping. So I think that there's a couple things on our side that would support the decoupling thesis.
Yeah, I think that we're going to have to kind of continue to see how things evolve. It is, how much is the current admin playing into that changing of price and potential here? Like, was pumping up Bitcoin following the election, just did it get pumped so heavily, and the sailors and the whoever else is piled in enough that we're still like outperforming the Qs, or is it something sustainable? Well, I think we'll have to see, and maybe more broadly on like whether people think 4-year cycles are based on like Bitcoin itself, or if that's I sometimes I question whether that's something more like human psychology based, of like when everything was based on a lack of fundamentals and we were just pumping things to stupid valuations with no real revenues or cash flows or anything like that. It's like maybe there is some semblance or like basis for some human psychology based cyclicality to the markets, which you do kind of see in the broader markets as well, where there are periods of overvaluations and undervaluations every whatever those cycles are of like 7 to 10 years or so. We kind of tend to see those things play out. Maybe that's something that's more concentrated here, maybe not. Maybe it's just the early stages of an industry that's growing. But either way, we'll save that conversation for a later a later debate. I want to bring Nick into the fold here. He is not the newest analyst on the team actually anymore, but one of the newer analysts on the team, our so-called DePIN guy. I think we've wanted to do more DePIN specific content for a long time and just sort of struggled to have enough, resources and sort of, strict focus and expertise. But Nick is very much that guy coming in to fill that need for us. And recently did some deep dive into Helium and kind of laid out his thoughts and the thesis around the project and everything that's going on over there. So I kind of want to open it up for you a little bit, Nick. I think most people are aware of Helium, what they're doing, Helium Mobile, etc. There's a lot going on in that play, but if you can kind of run us through and maybe just sort of start from the beginning, like what Helium is and where they're going, would love to dive in.
Yeah, thanks, Danny. Like you said, I think a lot of people are familiar with Helium, or at least were at one point or another, whether it was during kind of the conversion to Solana or during the rapid expansion of the IoT network. But a lot of Helium's focus has shifted over to the mobile network side over the last 18 or so months, I would say. An important caveat here is there's the Helium mobile network, which is like the sub-DAO under Helium's governance and reward structure that rewards for mobile offload, cell phones, laptops, any kind of Wi-Fi, things like that. And then you've got Helium Mobile, the MVNO, with the same name, but operated by a parent company, Nova Labs, who originally started the Helium blockchain and is the carrier that you see. And like if you go to the Helium Mobile Twitter account today, that's what you're going to see is like the MVNO side of it. That said, Helium Mobile has gone through quite a few changes, and maybe the broader Helium network as well has gone through quite a few changes over the last 6-ish months. Most notably, I think, and maybe the one that people are most familiar with would be the return to HNT, as they dubbed it. As they look to expand the mobile network into as the mobile network was added to the Helium network more broadly, the token structure was divvied up so that there was a sub-DAO for the IoT network and a sub-DAO for the mobile network, each with their own respective token, mobile and IoT, which you may have seen trading on Solana. Through the return to HNT, all rewards, all governance has shifted back to the HNT token, and the IoT and mobile tokens are redeemable via the treasuries, with the ultimate goal of having all of those tokens eventually get redeemed and the underlying HNT be issued back out into the broader market. From the mobile side, some interesting developments. I think probably the most notable in my mind is Inversion Capital and Santiago Santos proposing the ability to become the second service provider, with Helium Mobile, the MVNO, being the first service provider on the network. Inversion is looking to acquire Latin American MVNOs and then convert them to Helium Mobile from a cost optimization standpoint, as well as building a broader network coverage and improving legacy system standpoint. And so they have not made their first acquisition yet, but are looking to in the coming months. And that's something that I'm definitely tracking at this point. Helium Mobile, the MVNO, has also partnered with Movistar to help offload data to hotspots. Movistar is one of the largest telecom operators in Mexico. And so Helium Mobile's mobile network is effectively open for deployment all over Mexico, and the 2.9 million subscribers of Movistar are going to begin roaming onto Helium hotspots, which should increase fees generated, but also the number of people connecting on a daily basis. Rollout has been pretty slow so far, I think primarily because very little of the community was based down in Mexico, but some enterprise deployers are spinning up operations and have been rolling out coverage in the highest density areas that they can in the region. Another interesting one that kind of happened after my report is AT&T partnered with Helium Mobile, the network, to offload data to Helium Mobile, or to offload Helium mobile coverage to the subscribers of AT&T on, I think, all of AT&T's current plans, so prepaid and contract plans. This is interesting because I think it really marks the first time that a big four or big three MVNO in the US or MNO in the US has been willing to publicly state that they're working with a decentralized wireless project. We also saw XNet and Carrier One, which are two other North American-based wireless networks building in the DY space, announce similar partnerships around the same time. And so you're really seeing like a coming out party for for AT&T as they begin to recognize the benefits of community-owned infrastructure and the cost efficiency as opposed to them building their own Wi-Fi offload networks. Alongside that, another interesting development is brownfield hotspots on the Helium network. Up until about October of 2024, the Helium mobile network was entirely composed of, I guess proprietary would be the right word, hotspots. And yeah, I would love to pull up that chart. With that purple line representing hotspots produced by Nova Labs, the company, the parent company of the MVNO. But brownfield hotspots have come on the scene and begun onboarding significantly over the past 6 to 8 months or so. Brownfield hotspots are basically any existing Wi-Fi gateway that's compatible can flash a firmware upgrade. Now it serves whatever the original use case was, whether that's enterprise Wi-Fi or some sort of private Wi-Fi network or carrier roaming, but also have a packet on there that installs everything you need to be a Helium mobile hotspot. And so while they don't earn the proof of coverage rewards, they are rewarded for data. And we've seen that eclipse the number of standard hotspots deployed, I think, both from a cost efficiency in the ability to install them, or maybe they're already installed and you can just kind of click a button and have everything come online, but also the fact that they are typically a higher powered unit. And I think larger operators prefer to be able to have a little bit more granular control over their hardware.
Nick, do you know, I'm just curious, looking at the brownfield data, I don't know if that's just due to a lack of like data points or polling, or did like several larger sort of like groups or operators turn on like a significant number of devices at one time here?
Yeah, so those big spikes up are from single or maybe a few operators at a given point in time onboarding a bunch of hotspots. I think part of that is driven by kind of the slow rollout of firmwares. Like only certain manufacturers are supported over a period of time. And so once new manufacturers come on, people have an incentive to onboard them. But yeah, I do know that the majority of brownfield hotspots have been onboarded and are being operated by a pretty small number of enterprise deployers.
What's your expectation for like I guess like the mix between standard and brownfield? Do you think it's just people are going to go with the what they have, or is there like an economic advantage to one or the other?
I think your enthusiast, your home deployer, if you will continue to buy a standard hotspot because, like I said, there's that component of the proof of coverage, which is essentially in Helium's ecosystem, the universal basic income. As long as it's plugged in and it's you're not gaming, you're verified, you're gonna have a consistent reward. But and well-performing hotspots should earn multiples above what that proof of coverage reward is in their data rewards. So I think your enthusiast will continue to deploy standard hotspots unless they decide as a network that standard hotspots may not need to be produced anymore with the compatibility with brownfield conversions. But I think anyone that's deploying Helium hotspots more as a business model and less as a hobby or an interested party would probably lean towards brownfield hotspots. And I would say I would expect it to be 10 times higher than the current figure a year from now. In terms of a path forward, I think for Helium, it's really interesting to see their ability to either onboard or offload data to existing carriers internationally as well as domestically. I think they've proven their ability to do that in the last 2 months or so pretty effectively. That said, I'm excited to see what happens in terms of international expansion. I think that's probably on the horizon. Europe is probably a prime target for this right now. And have heard some rumors that there may be some testing going on in certain regions in Europe. But I think probably the most compelling thing about the project right now, and maybe the biggest catalyst going forward, is going to be more MVNOs, not necessarily MNOs and like full-fledged carriers, but MVNO networks that are looking to save on costs, adopting Helium's technology and offloading to Helium, hopefully domestically, but definitely I think within the next few years that should be a global trend. And yeah, I think this chart paints a really compelling picture as well. It's on a logarithmic scale, so it's hard to see the stark difference here. But your gray line here represents Verizon's cost of user acquisition at a given number of users, and then your purple line represents those same figures for Helium, where up until that 100 million users point, Helium maintains roughly a 10x lower, or I guess like a 90% reduction in terms of the cost of user acquisition.
Do you think those lines are going to cross at some point, or do you think that they kind of both approach same like asymptotic value?
I think there's definitely a point where they cross. The caveat here is that like the figure for Verizon to acquire its first user and really almost all of its users is primarily constrained and so high because the Verizon had to go and build out cell phone towers, right? Like it took them decades to get this done. They have to continually maintain them. They have to continually put up new ones in regions where they may not have enough coverage. Whereas Helium is obviously not deploying cell phone towers, but is akin to a cell phone tower in that you're deploying a hotspot that can serve coverage to a much smaller region, but also at a much smaller cost, and offloading the responsibility of deployment, maintenance, and ultimately the rewards to a community member or an interested party. We've seen companies build out business models around being a Helium deployer. I'd say there's 10 to 15 that are out there today that have built full-fledged businesses around the model. And we're seeing that take off, especially in regions where building new cell phone towers may be limited by either some sort of government regulation or it's just not feasible given the landscape.
Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you'll need to build faster, safer, and smarter on Algorand. AlgoKit 3.0 now offers native TypeScript and Python support, visual debugging, and seamless testing. Build, test, and deploy with tools designed for speed and simplicity. Start building with AlgoKit today by following the link in today's show notes. This episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Follow the link in today's show notes to grab your Ledger now. Yeah, I think it's really interesting. The forward-looking question I have, and I think you kind of addressed it, is like if they can break into maybe some of these international markets. Like, I guess we'll sort of have to see how Inversion Cap kind of goes about their operations here, like who they're planning to acquire and if they can scale that. And I guess I'm just wondering, like, you know, you mentioned early on like the change from the sort of multi-token model all to like back to HNT, which I think was probably just a ton of confusion in reality for, you know, someone maybe considering like an investment in HNT, for example. It does make you wonder, in my mind, at least for a lot of the DePIN projects, is like, does the token really make sense as an investment, or does it make more sense like as an enthusiast to simply run a node, or is it some, you know, maybe some combination of things? I think that's kind of what I'm always wondering, because just due to how the incentives have to be played out in that, node runners have to be incentivized in some fashion. Like, as just an owner of the token, you may be you'll be missing out on maybe some of the value of like the network and why it was built. I'm curious your thoughts there generally, Nick. Like, how do you feel about Helium and like H&T and how that interaction plays with operators?
Yeah, I think something that I probably missed here is the caveat around data credits, if you can pull up that chart. But the data credits are really like the API credits, if you will, of the Helium ecosystem. Anyone who wants to use the Helium network, whether that's the IoT network or the mobile network, pays in data credits, which are fixed to a price that's pegged to $1. It's a very small fraction of $1, but they're fixed in price to the dollar. And Helium has a burn to mint equilibrium where when you burn data credits, Helium is minted for that data transfer and then rewarded to the hotspot that made that happen. Helium's price, I think, is reflective right now of the amount of data burn that we're seeing, but the catalysts I outlined could dramatically increase this. And so there's a high likelihood that we see some HNT price appreciation over the next 12 months that is unprecedented and also much more stable than any Helium price appreciation we've seen in the past, which was largely based on speculation.
And that'd be based on like the expansions and potential increase of users from some of these networks that are going to offload to Helium.
Yeah, I think if you look at the chart here, like this is about a year of data. It's the past year of data burns or data credit burns. But that said, this represents maybe 1 to 200,000 users using the network on a consistent basis, including all the IoT stuff, which is obviously priced far lower than Helium's mobile network is in terms of gigabyte usage. But that said, if like the movie star expansion is a great example, I think. 2.9 million subscribers onboarded, but very little supply side, very little coverage deployed in Mexico. And of those 2.9 million subscribers, very few of them have opted in. Currently, it's an opt-in edition. It's not a paid edition per se, but it's something they have to manually enable. Once that becomes automatic and installed on every new phone, every carrier in Mexico, we should see this dramatically increase. And then I think this data is a little bit old, but there's definitely been a surge up in data credit use, or at least will be a surge up in data credit use through AT&T allowing all of their subscribers in the US to connect to Helium Mobile whenever it's available without knowing about it. So I guess long-term price appreciation, I think, or I hope and think that it should be slow and steady as we move on. I don't necessarily think that it's going to be another rocket ship the way that the HNT token has performed in the past. But I'm generally pretty optimistic on the network right now, and I think that the token is a compelling investment if you believe that Helium Mobile will ultimately be able to eclipse some of the Web 2 incumbents like Boingo, who deploy similar Wi-Fi networks at a much higher OpEx.
Awesome. Yeah, it definitely seems like, I mean, partnering with AT&T, Movistar as well, like the growth side of the picture seems fairly clear, and we'll be looking to kind of see that play out, right? Where you expect to see more offload, more usage, and more of these burns, like you mentioned.
Absolutely. Yeah, I think it comes back to partnerships, and both through acquisitions in the inversion cap case, but also Nova Labs is very likely has some deals cooking in the back rooms right now, and I think we should expect to see those come to fruition with maybe a little bit of an accelerated pace post AT&T coming out of the closet.
Awesome. Love it. I think this is probably a deep dive into Helium, and I know your full report, it's available on the research site for the subs that, I know some of our audience has probably been asking for a while that we have not been able to provide them. So glad that you were able to do so. We're going to do kind of a complete 180 pivot in another direction. We've got Shapiro on to talk a completely different topic, but Ethena has also been a hot topic lately. They've got talks of their converged chain. Everyone is super excited about stablecoins right now, and tokenizing different funds and other things on chain. And like there's some implications of Ethena kind of being in this realm and ballpark. So Shapiro, I want you to kind of take it away. Like, what's hot with Ethena, and what should people be thinking about that maybe they aren't already?
Yeah, absolutely. So I feel like coming out of DAS this year, um, the team was very, like, I guess, was very constructive on stablecoins, right? In terms of like the one theme that I really heard from everyone is people think that stablecoins are going to grow a lot, right? And there's regulatory reasons for that, and we'll get into that. But just thinking about, like, what is a way to express that view, given the liquid tokens that we can invest in right now. And at least personally, I felt like Athena was the first thing that came to mind for me. And obviously, like, we've written about them once before, just like diving into SUSDE and the mechanics behind it. But this time, it was much more about, right, like they're really going through an evolution right now, right? They're going from a single synthetic dollar issuer to now an entire, like, KYC, TradFi enabled, full on DeFi chain, right? So they're evolving, they're growing their product suite, they're attacking new markets, and I guess, like, the one common theme is that um, they're kind of stablecoin oriented, but I think that, right, we're starting to see them move into, like, all of DeFi, and specifically permission DeFi. So I felt like it was a great opportunity to dive into them. Like, they've grown so much in a year, and now they're in the process of changing so much. Like, I think that they're worthy of further analysis. And so, um, first thing we'll focus on, right, is their growing product suite. Obviously, USDE, that's their flagship product, and in just a year, it sits around like 5 billion in TVL, which it's one of the fastest growing DeFi apps ever. Like, there's clearly demand for this yield, and obviously it's crypto native yield. So, um, from delta hedged funding rate basis arbitrage, and that actually tends to be inversely correlated to Fed fund rates. So I think that I mean, basis arbs. There's probably, I think, over, I did this analysis around maybe um, 1 trillion, 1.2 trillion AUM in basis arb funds. Most of that is like treasuries, but still a significant amount, hundreds of billions in equities, commodities, precious metals. So this is a very common trade, and the ability to tokenize it, where not only you can capture the yield, but also you now hold the token that's composable. You can put it into a DeFi product. You can take a loan out against it, right? Like, this is such a great product, and it's I truly think it's superior to the TradFi alternative, right? Because it's tokenized and you gain those composability benefits. And I think, right, like, TradFi is always searching for yield, and so the fact that this does bring diversification benefits to a traditional portfolio makes it even more um, exciting to them, right? And so, to bring it to them, the first product that they're still in the process of making is IUSDE. So IUSDE is effectively just a as USDE, but with a KYC KYB compliance wrapper around it. Um, Essentially, they're just trying to make USDE and the stakeable version SUSD accessible by TradFi. So my guess, and no information here, but I'm guessing that they're going to be releasing this sometime around the time when they release Converge, which is slated for Q2 of 2025. So obviously this quarter, we'll see if that happens. But supposedly they're on track. The next product the next new product that they're actually have already released is USDTB. So USDTB is their treasury-backed stablecoin, which in the case of this is generating yield through its reserves, right, which are effectively backed by treasuries. Specifically with USDTB, Ethena purchased around, I think, a significant portion of the BlackRock's BUIDL fund. I think upwards of 50-60%, if I believe, or if I recall correctly. And BUIDL reserves, right, which those are backed directly by treasuries, account for 90% of USDTB's backing. The remaining 10% is a mix of stablecoins. So I think USDT and USDT and USDC. And they have some of those stablecoins for the just to allow people to mint and redeem smoother, because it's just easier to mint and redeem with those stables than it is with BUIDL directly. So I think USDT is really interesting because, I think it's interesting for a few reasons. So the first kind of clear and obvious reason is it's synergistic with USD, right? So USD only generates yield, or a significant amount of yield, excess yield, when funding rates are high. So if people are speculating on crypto, funding rates move up, USD yield can get anywhere from 10 to 30%, right? I'd say even higher than 10%, maybe 15 to 30% on average, kind of during bullish times in the market. During bearish times, it can compress all the way down to sub 4%, so below treasuries. And then in some scenarios, even negative, right? And so we have seen USD yields go negative, which the stakers incur that loss directly. What Athena is actually doing is during bearish times, they'll actually change the mix of USD's reserves to kind of soften that, I guess, persistent negative funding rates. And obviously they're highly mean reverting. So, negative funding rates aren't going to last for more than a day or two max, usually even less than a day. To the tune of it actually directly impacting USD staking yields. But what Athena can do with USDTB is they can actually, as funding rates drop, they can increase the amount of USD reserves by adding USDTB. And that kind of provides a floor to the funding rate, right? So if USDTB is yielding effectively, whatever the typical 10-year treasury is, let's say around 4%, or short-term T-bill, let's say it's around 3.94%. That effectively provides a floor on USD. So that de-risks USD, right? By adding that floor. And I guess it just gives it a more consistent yield. And now Athena can do that with its own product, right? So I think that they're very complementary, which I think that's part of the reason why they're trying to make Converge is. I think that they're going to be able to create some really cool products by mixing and matching, these different stablecoin instruments. You put a perps platform on there, Ethereum, you put an options platform on there, Derive. And I think that there'll be some really cool products that come out that are a mix of all these. One of the biggest risks right now to Converge is actually the stablecoin regulation that's coming out. And now might be a good time to talk about it. You have the Stable Act and the Genius Act. The Genius Act is mostly bullish. That's going to enable, fully legalized stablecoins, and make it so that they're not seen as securities. The Stable Act, though, is a little more bearish in its current form. And Coinbase has pushed back on this, and the motion's been denied. But in its current form, it would disallow yield-bearing stablecoins. So I think that would make SUSD a security. But something like USDTB, obviously users won't be able to collect yield on it. But I think that USDTB, by adding this to the product suite, which is effectively like Circle or Tether's model, it just gives them another product that that makes them a little more resilient to if one of those stablecoin acts comes out and potentially has negative ramifications for USDE. So that's USDTB. I think very bullish development. Currently sits around 1.5 bill TVL. And finally, like the big thing that they're doing right is they're creating their own chain, Converge, which they saying is going to come out in Q2 of this year. Converge, I think what's going to make it interesting. Obviously, the architecture is a little interesting. They're using a custom Arbitrum sequencer and Celestia for data availability. They believe that this combination is going to give them like really good scalability benefits, and they're in an ongoing partnership with Arbitrum to help kind of to customize this chain to do exactly what they need. So that's pretty interesting. But I think the thing that actually might make this different, right, than you're just like your next typical run-of-the-mill L1 launch or L2 launches, they're going to tie together both permissionless and permissioned apps together and make them all accessible from the same chain. And so this is really important because to me, the largest user of DeFi is going to be TradFi. And the only way that DeFi grows 10x is if TradFi starts using it, right? Like there's only so much retail in the world. The vast majority of capital sits inside these massive banks, asset managers, CSDs, FMIs, etc. Right? And ultimately, they're only going to be able to use these products if users can, prove or verify that, they are a, actual person, right? Like, as much as we want, like, fully permissionless capital markets, and there will be an environment for that. For a lot of the, at the end of the day, governments are the ones that sets the rules, and I think that, permission chains will be a thing, right? So, what they aim to do with Converge, and obviously they're partnered with Securitize with this. They're going to move all of their products onto Converge at launch. So there'll be around 10 billion in TVL right away, between USDE, USDTB, and then Securitize's Apollo Diversified Credit Fund, ACRED. You combine all that and, probably a couple more securitized products, you get 10 bill. So that's fantastic. But the thing that I think is really interesting about Converge is that I think that if they are able to kind of launch the compliance wrappers on their stablecoins so that TradFi can start, purchasing, or they could expand it into other venues, I think that this could be a massive growth vector. And the reason why is because the vast majority of revenue that Ethena generates with USDE is effectively limited by the total open interest of crypto centralized exchanges, right? Perpetual futures exchanges. With the launch of the Bitcoin ETFs, and obviously we have CME futures as well. Those have been around for quite a bit longer, going back to 2020 in Bitcoins, in the case of Bitcoin options, 2021 for Bitcoin futures. Actually, the majority of Bitcoin OI and ETH OI actually sits off centralized exchanges, right? It's sitting in CME and Bitcoin ETFs, and options on the Bitcoin ETFs. So CME futures between Bitcoin futures options, ETH futures options, which both are coins that Ethena delta hedges with. Currently around just under 20 billion in open interest there. Currently around 14.4 billion in open interest across all the Bitcoin ETFs that have options, so like IBIT, FBTC, which is Fidelity's, ARCB, which is ARC's 21 shares, BitB, which is Bitwise's, and BTC, Grayscale's Bitcoin Mini Trust, 14.4 billion OI. So you combine those two together, and it actually slightly eclipses the total OI across all the exchanges that Ethena delta hedges on. So that's Binance, OKX, Bybit, and Deribit. And so let's say they launch Converge and they have IUSD, right? And this now satisfies, or let's say like back up. So the goal here would be, right, to drastically increase their revenue. They need more OI. There's all this OI sitting in CME and options. If they can start delta hedging there, then they could safely mint a bunch more USDE and significantly increase the TVL and revenue. In order, though, to delta hedge on those exchanges, right, they're going to need to be compliant with US regulations. So, my guess is that's the reason why they're making Converge, right? If they can have IUSD, which is backed by CME, and the ETF options, and then you have SUSD, which is backed by the crypto side of things. It's effectively the same product, but the other ones are regulatory compliant, and that's a massive market now that they can go after. So yeah, I think that this is all part of the plan for Athena. And yeah, makes me very bullish on them.
AlgoKit 3.0 includes all the tools and open source resources you need to unleash the power and performance of the Algorand blockchain. Access a resilient network with instant finality, consistently high throughput and low fees, and layer 1 features like atomic swaps and native assets. No smart contracts required. Whether you're building DeFi protocols, enterprise solutions, or next-gen dApps, AlgoKit has all the tools you'll need to build faster, safer, and smarter. Start building with AlgoKit today by following the link in today's show notes. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduce the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional passwords and enhancing your digital security. Follow the link into today's show notes to get started with Ledger today. I did want to comment on one thing because I do see this like becoming more and more of a bigger ticket item, it seems, for the larger projects and businesses in the space. Is like we're seeing the continued like stepping stones into like these permissioned apps in the permission space. Even Coinbase, like they're experimenting with permission liquidity via Uniswap v4 on Base. And I'm sure like in that scenario, you can imagine, they have maybe, KYC'd or maybe even like accredited investors or others like on their platform that they want to be able to allow them to use products on chain that are compliant. And this is probably a piece of that. I guess the big question is like the regulations maybe shake up a lot of this, right? You went over that piece around, if yield bearing stable coins are kind of a no-no, then like, maybe they're a security, maybe they need to step through some additional hoops. I guess the hope at this point is with the sort of like pro crypto admin today, you would maybe expect that like following the stable coin and, some market structure bills, you would maybe see some additional things that offer more clarity around like if something is actually a security, like how to register it versus the prior sort of environment where it was like, get sued or,
Yeah.
Go out of business. And maybe that's the goal, but it seems some of those pieces are unclear today.
Yeah, I don't think you're absolutely right. It's not the end of the world if, there's something that comes out and says like, all right, if your stable coin returns yield, it's a security, which like, I mean, that to some sense like that, and to some degree that makes sense, right? Like if you have a tokenized basis trade that is, tethered to a dollar because of the nature of the trade, like that, to me, that's not a stable coin, right? That's a tokenized, basis trade, right? That's an actual strategy. You have to
It's a tokenized
invest in
fund.
a hedge fund. Yeah, like you have to invest in a hedge fund that is promising, that's saying they're going to make you money to invest in that. So, but right, if there's new regulation that comes out that says like, oh yeah, this is fine, come register it. It's a security. It's this type of security. That's fine. Then, that clears it up. That might slow down the adoption rate. Um, but right, like my confidence in that happening is high. Now, if that occurs, right, the other risk that gets introduced is competition, which leads to yield compression. right? So like right now, Athena looks at these new avenues for new avenues for growth, and I think that they're going this approach because like they've effectively tapped out like all that they can grow in the crypto market, right? Like if they start expanding beyond 20% of all open interest, they actually could destabilize the market, right? So we're actually Blockworks advisories on the risk committee, um, and they've been part of research that effectively determined, right, like you don't want to go above that 20% limit. Um, and so it's just, like there's only so many people in the world that are going to go make a Binance or Bybit account and start, longing on perps, right? Like I'm sure everyone here has had that experience. You go do that for a month or two and you're a lot poorer, and then you stop, and then you just, then you get comfy in spot. Um, right. I think, unless you're a very sophisticated trader, really the only other way people use perps, which I think is smart, is hedging, right? Or running this type of delta neutral trade yourself. Um, or if you're like a protocol and like, you're shorting your own token as a way to like, or before unlocks, but that's another story. Right. But really it's that funding trade. So I think that, um, I think that will be de-risked, but also, right, like everyone and their mother wants to do this. And I guarantee you, TradFi is looking at like, Tether's revenue and going, why can't we do that? And then the next thing they're going to go look at is a tokenized basis trade. So I do think that there'll be a lot of competition, but Athena's the first mover. They're crypto native. They know how to do this. And so, I think that they'll have a leg up on the competition.
Yeah, I think that makes a ton of sense. The one thing that I see as like sort of a risk in sort of the DeFi adoption that we see today of products like USDE is that they've become very prominent within lending markets. Obviously, due to the nature of them being yield bearing, and the PTs available on like Pendle markets, for example, as well. And like I don't know, they've become very intertwined with both Pendle markets and then like a lot of Morpho, for example. You see both USDE and also the PTs from Pendle being used quite a bit as collateral or as devices to earn yield on the deposits being put on those platforms. And so it does make me wonder, like, if it were to become true that you cannot have a yield bearing stablecoin or even like fund token on chain, it could totally shake up those dynamics. But I guess we just have to be hopeful that the people advising on this bill are incentivized to make that not happen. But
yeah, I mean, I think that they do it in a smart way, right? By like having USDE separate from SUSD, right? Like you kind of insulate USD a little from, you can still use USDE, which is fully backed by reserves or delta hedge positions, and only if you stake it, right? That's when you're now taking the risk to get that yield. If you don't stake it, right, you're not taking that risk. There's obviously depeg risk, which exists, which is amplified the more that it's used in all of these different pools. That is, I don't want to say impossible to model, but close to impossible to model accurately. Um, and so, right, that'll always be a risk. But there is no, systematic death spiral, Luna risk here. That mechanism's just not at play, right? It's an entirely different type of algorithm, or it's a different class of algorithmic stablecoin, right?
Mhm.
I wouldn't call it an algorithmic stablecoin, but yeah, I agree. I mean, I asked the team, and they thought the regulation. I said, what do you think the biggest risk is? And they said probably regulation could slow them down the most if it came in pretty bad.
Yeah, and maybe the outcome is that markets that are permissionless today have to become and transition to being permission markets for the products that maybe end up getting deemed securities or whatever they have to do, like registered as some type of special asset. But yeah, it's in the future. We'll see how that plays out. Otherwise, I think great deep dive. We'll call it there on Athena. I thought that was really great. You went in super detail. We went in pretty good detail on both Helium and Athena. I'm going to change up the plan. Let's jump into AI for today before we close things out. I'm curious. I'd say you guys are probably the two prominent folks on the team that are keeping up the most with AI adjacent tech in the marketplace. And I'm curious, like, what we're looking at. There was, a few months back, a ton of excitement, right? New models were coming out, like deep research and all these things were popping up. There was the AI sort of meme agent craze. And it's kind of died down quite a bit, especially as the market has contracted since, beginning of the year, end of last year. Where are we sitting today? Like, what are the most exciting things that maybe people are not quite looking at yet? What are you guys thinking about?
Yeah, I think a couple of things that I've been thinking about more broadly on the AI sector as it sits within crypto and maybe even just within distributed systems in general. The primary narrative that I think I've been paying attention to is that decentralized AI can work at scale. It probably will. And I think different market catalysts, especially tariffs, may cause this to happen on a little bit of a shorter time horizon than we were expecting. But the players in these markets are primarily going to be existing data centers that are serving some sort of Web2 use case already and are looking to monetize idle compute. I think that's probably the most compelling thing about decentralized AI today is that you can kind of pivot on and pivot off as you increase or decrease scale in a primary business model. But I think this whole narrative of like we can train models with a whole bunch of gaming PCs distributed at 1,000 houses is dying and will die very soon. That said, I think I'm still bullish on the sector as a whole. But decentralized AI projects need to scale into some sort of semblance with the efficiency that we're seeing in the Web2 sector for training and inference specifically. There are some new technologies coming out of NVIDIA in terms of being able to train on distributed clusters, but none of the Web3 projects are supporting this today. And overall, I think Web3 projects really they need to provide either some sort of benefit in terms of savings or in terms of performance or maybe reliability over the existing solutions that exist today. And I'm not seeing that anywhere across the sector currently. I don't know. Dan, do you have any thoughts on that?
Yeah, so I'd say sticking on compute and training and inference right now. And I know we talked about this. Like I completely agree. Right. I think when you look at these GPU marketplaces and maybe say you're a little disappointed with the growth, something that doesn't go mentioned is reliability. At any point during like pre-training, if like a single GPU goes down in the cluster, like the entire training will stop and get screwed up, right? Like so you need everything to be super reliable, and then obviously you need a bunch of GPUs to do pre-training, and typically, right, I know you brought up distributed training, like Google's doing a little like co-located um, data center distributed stuff, but all those data centers are within 50 millisecond latency from each other. um, yeah, typically to do pre-training you need low latency interconnects, meaning like you actually need all the GPUs to be like hardwired together, and to be, which means that they need to be in very, very close proximity, right? Noose just raised 50 million from Paradigm, which I thought was interesting. I'm definitely I'm a little bullish on Noose. I mean, obviously, like the whole space in general, I'm a little lukewarm on, but just as you are, Nick. But um, I do think what they're doing with their distro optimizer, which the technology is based on an algorithm written by one of the co-founders of Noose and also one of the co-founders of OpenAI. So like I do think it's legit. There's something there. Like they were able to train a 13 billion model, 13 billion parameter model relatively efficiently. Um, but then right, like to support what you were saying, Nick, like they used a combination of like a bunch of like tier two, GPU cloud services, right? Like a Lambda and like some other people. So I think, right, similar to like why is Helium successful? Like for any DePIN thing to be successful, like there fundamentally needs to be like a latent resource that people have that they effectively have a zero opportunity cost dynamic to contribute that resource to make money, right? It's like if you live in the middle of New York, you can't build a cell tower there, but you can put up this router and start making money. Like you buy this thing and it starts printing for you, right? Like why wouldn't you do that? It needs to be easy. And so if you have all these data centers that are, their chips go out of date within 5 years, and now like the life cycle of these chips is accelerating, or the lifespan of these chips is decreasing in an accelerating way. So it's getting shorter and shorter. So people have excess chips, they have potentially spare capacity, and then at all the or all the hyperscalers, right? They have backlogs multiple years because AWS is backlogged from Anthropic, Google, Gemini is just using Google, and then Microsoft's data centers are backlogged from OpenAI. So the AI labs are getting priority access. So I do think that, like we'll see, like if DeepSeek R2 is like 95% of O3, I think that's going to be massive because I think O3 is, it effectively saturated the benchmarks. And, it doesn't look like a big increase, but I do think that the leap from O1 to O3 was significant, specifically with tool use. Like it actually feels like pretty close to like a general purpose assistant that is smarter than you and everything. It's pretty much there. So yeah, between the dropping costs, people needing, wanting to access the, compute, it's backlogged somewhere else. There's excess chips. These second tier labs can buy them and, or take decommissioned chips and offer just like spare compute that they wouldn't sell anyways. And then you can connect all these into a single network. Like I do think, I guess like I'm becoming more, I'm becoming more bullish on that being like a real thing. I still think that there's time between now and then, and I'm gonna need to see like, how big of a performance and how cheap are these new models gonna get. But yeah, I do think that it's something feasible that could happen. So we'll see though. Like I'd say up until maybe 3 to 6 months ago, I was pretty bearish on the compute DePINs, but I guess I'm kind of warming up to these new ones as of recently.
I think there's also kind of an angle here with something like 00, right? Like they're targeting blockchains today, but in the future could target a pretty wide variety of use cases. And something like 00, access to private fiber, 10 to 100 gigabit per second speeds, could really change the distributed training landscape, both within crypto and outside of crypto. If data centers are already participating in DePIN plays like 00 and are equipped with 00 hardware, or maybe even redundant 00 hardware, they may be able to effectively enable training at a much wider number of data centers. That said, I still think it needs to occur within a data center. But a project like Nous could theoretically take 10 tier 2 data centers that are 00 enabled and be able to have them support the training of their next model. And hopefully that is the case in the coming years.
I think that's a great point about the pivot. I feel like we've actually seen similar, it's somewhat different, but from like Bitcoin mining focused companies that have in the past maybe been entirely focused on that mission and then saw the opportunity to transition into like HPC or other like AI based compute, or offer that as like a separate offering just based on the infrastructure that they had for supporting, tons of devices, ton of energy output. There was sort of a natural fit there. So like you're saying, Nick, maybe there's an opportunity to kind of play in this field for now and perhaps like a sort of lateral move into another opportunity might present itself in the future that like kind of keeps the wheels turning for a lot of these things.
Have any of you been following the new, like the OpenAI updated 4.0, and its personality kind of changed a little and people push back? Like, now OpenAI has persistent memory, so it tracks, it remembers everything you've ever told it. And I've seen people start discussing how the model, instead of optimizing for maximum utility, it actually starts learning you and starts optimizing for maximum engagement, like a social media app. And so to me, that's incredibly bullish. I mean, maybe Elon and Grok, maybe it's bullish Elon because maybe he keeps things neutral. But I mean, really, it's bullish decentralized models, right? Models that are pre-trained, and you can, or I mean, whatever. You could even just use like DeepSeek V1, like, or whatever. Take the best open source model, distill it, and then you do decentralized post training, reinforcement learning on it to whatever, optimize it for whatever use case you want. And like, this is the model you're getting. It's not changing to to make you more addicted to using it or whatever, right? Like, this is the model, it's optimized for this use case, and I know for a fact that this is how it was trained and this is how it will be. And so yeah, I think if the centralized models kind of start moving towards I guess, like, yeah, the same path that like social media went, right? And just trying to make it addicting and maybe potentially less useful, then maybe there will be a market, an actual fundamental reason other than just saying, oh, it was trained in a decentralized way. Like, the decentralized models might actually start to produce better outcomes or have more utility for you. So that's something else that did occur in the last week that I thought was interesting.
Yeah, I actually have been following it, and I've seen some comments that, like, Altman saying it's a little crazier than they thought it was, like a little unhinged even, and like acting a bit like an unexpected responses almost for some people based on their interactions with it, which I find a little bit funny. I think you do make a good point though, like, while I think everyone sort of expects and is believing that at some point there's like a path to profitability. I mean, this is a clear lever, right? Like, TikTok makes a ton of money because they keep people on the platform. They, have ads and sponsors and other things that, like, as long as somebody's scrolling, like, they're or like via the marketplace and other, like, auxiliary things that they get cash flows from their users on. They found an effective way to monetize that platform. Just with the scaling and the amount of usage that they have today and their upfront costs, like, I think these large AI teams are still quite far away from that, like, picture of like operating profitability. So it wouldn't be surprising to see that be like a lever, get people addicted, and then find ways to add little monetization schemes into the design, whether that's like pay for additional special interactions or like some odd marketplace combinations or other things that they
Yeah,
can
I
figure out
mean,
how to bake in.
it could be embedded into the model, right? Like, let's say, just to pick an arbitrary example, like, um, like I asked it the other day, like, find me a recipe for like the best butter chicken, right? I mean, what if you have a cooking company, pay it, say, hey, if someone searches this, like, nudge them my way, right? And, maybe like things that are like opinion based could start to get skewed by advertisers and in the back end that actually gets pushed through into the training stage where the model will, actually think that. Whereas, like, let's say you use like a neutral decentralized model, it might give you a different answer because it's just looking at consumer reviews or whatever, right? So yeah, I think there's a million ways that they could monetize this. And um, yeah, we'll see. I mean, they're collecting all of our data and thoughts. So
I think early movers in like the AI training SEO space, like if you can optimize your website or your content to be better ingested or more relevant during training, you're going to see that data be much more prevalent in the responses from the model. And so interested to see how that plays out. I know a lot of people are thinking about it, but I'm not sure anyone's doing it effectively quite yet.
other than decentralized training and inference, are there any other I guess people just throw around the word agents, but are there any other than maybe those? Are there any like other use cases in DAI that interest you?
I think trading is one that a lot of people are trying to tackle, whether it be kind of an autopilot / like assistant for your trading or fully autonomous trading. I've messed around with a couple of these platforms, thrown a few USDC in or whatever, and found that they can't even like outperform the every time I've thrown money into a decentralized trading system or an autonomous trading system, it has lost money on every trade, which is really interesting. I think part of that is that current AI models don't seem to have the strongest understanding of like understanding, ingesting, and making reasonable insights from market data. Whereas I think they can explain your current position. They have a hard time forecasting what will happen next. But I think there are definitely avenues for agents to come back into the spotlight, but I don't think it's going to be the same wave that we saw late last year with virtuals and Zero Bro and all of the agents that were flooding Twitter. It really needs to be more focused. It needs to be more valuable. And I think that we, within the next year, will probably see some very useful agents come on the scene.
I like that. I was following the sort of like DeFi narrative for a bit as well, and they were essentially like glorified generalized trading bots a few months back, but with limited traction and not making any money. Um, I do wonder if we'll see a return to that, but so far it seems that just teams that can sort of find targeted ways to incorporate AI features or like just add meaningful features into their applications. Like multi-product DeFi is a thesis that we have. The most successful teams are kind of tacking on extra verticals and like leaning into different revenue streams. I think these like very simple generalized attempts at just like putting the same chat bot interface in front of people and saying like, yeah, just type anything DeFi related and it will like do the action for you. I don't know that like users really want that open world of possibilities. It's probably more likely that like you give them a similar interface, but if you can bake in some of that behind the scenes, but still on the front end, it's like, I have my buttons to do this, that, and the other thing. I think they'll have to be a bit more smart and pointed about how to build those things to see them get any meaningful traction. But we'll see. Awesome. I think this was a great conversation, guys. We were able to talk through a ton of stuff, and glad, Nick, to have you on for your first step. Going over Helium, the sort of big narrative contender for all of DePIN, I think most would say. Before we hop off, I guess, do you guys have any big takeaways? If it's about the markets, if it's about AI, if it's about DePIN, your favorite project, what are we feeling going into the summer?
I think unfortunately I still think macro uncertainty might be in the driver's seat a little bit in terms of price action, but yeah, I mean there's green shoots popping up, right? Like I think what we've seen over the last month is that there's always a desire to bid something, and if the market shows signs of life, like there will be green shoots. And so these are three categories. Like Helium is a DePIN leader, Ethena is a DeFi leader, and now kind of like a leader in kind of like the RWA sector, and there's some raises in the crypto AI space. I think just staying close to the metal and researching now, because if there is some form of certainty with respect to all the tariff stuff and macro clears up, like I think that the market would be in a great position to rip, right? And I think now is the time to figure out the things that you want to buy and accumulate, so that you're ready for when that occurs. So if I had to guess, probably a slower summer like last summer, but there's still a bunch of opportunities, and this is the best time to kind of put your head and get down the weeds and do that research.
Yeah, I think I'm really looking for catalysts that are going to bring new people into crypto, not new capital, like new individual users, I guess is a better way to put it, whether that be an institution or just a retail participant. Converge, like we talked about, fills that gap. I think there are quite a few use cases that are going to fill a similar gap, but generally not feeling incredibly bullish about markets right now. I think that in the near time horizon, there's going to need to be some sort of bullish catalyst to push us up to maybe not price wise, but sentiment wise to closer to, I think, what people expected for 2025. That said, the sectors that I'm tracking, namely, are going to be institutional adoption as well as just DePIN in general. And I expect to see in the coming months some interesting adoption in both of those from either large corporations or institutions who are looking for alternative avenues, especially as traditional financial markets continue to chop and be very uncertain.
Love it. And I'm going to take a cop out here and say I'm excited for permissionless coming up end of June, June 24th through the 26th, 10% off, 0x10. The link is in the description. Buy some tickets, come out, see the crew here. We'll talk to you about DePIN. We'll talk to you about Ethena. I'll talk to you about trading bots, consumer apps, memes, whatever you want to talk about. And join the Telegram. Join the 0x Research Telegram. The link, I think, should also be in the description. We have a lot of fun in there. The research crew is in there. Tons of people from around the space. All of our favorites that like to chat are in there. So thanks so much for coming on, guys. It was a great chat today, and we will see you all again next time.